Hi, hello, good evening, friends. Warm welcome, one and all. Welcome to Nifty Banker, India's first retail Bank Nifty Traders Conference. So, friends, we are in the 12th session of our webinar series. Our speaker for today is my good friend 𝐤𝐫𝐾𝐳𝐿, who is a very well known options trader, popularly known as Just Shiva in Twitter. He is one of the most successful option scalpers in our community. He was a serial entrepreneur who took successful exits from a couple of his startup engagements before his full-time venture into the financial markets. So he does mentors many budding traders also. Many of his students are equally successful. And Shiva, on behalf of the entire Bank Nifty Nifty Banker audience, I extend my warm welcome to you into the program.
Thanks, Ashok, and it's been like an honor. And I think this is the third time we have been collaborating with you, and a couple of times we had a great session. So let's hope this is going to be another great session as well.
Thank you, sir, and the stage is yours. Please go ahead.
Thank you. Thanks, Ashok. And good evening, everyone. Guys, I think like there have been a few people who have been asking about like quick intro about myself. I'm 𝐤𝐫𝐾𝐳𝐿. Just to give you a brief glimpse about like my trading experience and so on. I'm an hotel management graduate. Before from the hotel management, I moved into the BPO career. So between 2003 and 2000, almost from 2000 to 2015, I was like a full-time employee into the BPO. But between 2011 and 15, I was running my own organization, and I had an exit at 2015. Since then, I became a full-time trader. In terms of my trading journey, it started from 2007 during the the peak of a last bull market. Okay, so that is the area wherein I entered, and I had a big struggle learning the process and other things. To be honest, lost quite a bit of money before became a successful trader. It took several years. I wouldn't say it's 1 or 2 years. Since 2016, I would say that I've been little successful. I wouldn't be saying boasting myself that yes, it is. But since 2019 and 20, yes, it's been a very good year so far. And it's scalping is something which is my cup of tea, and that's something which I like to do. As Ashok pointed out, anything which is your known forte, you should definitely try to work on that and then keep it going. So that's about the in terms of my trading journey and other things. Probably in case if you guys have more time in the future, we will try to give you a more glimpse about my lifestyle and everything. Okay, before we move on, I will just give you a quick disclaimer. I'm an NISM certified professional for equity derivatives, but not a SEBI registered advisor. So any information which you're going to be seeing on this presentation is purely for the educational purposes, and please do not rely or trade purely based on this information alone. So option trading has large potential rewards and risk, and you all must be aware about the risk involved and then try to take trades in the market. And most importantly, any past performance of any trading system or methodology is not necessarily an indicative of the future results. So please consult your financial advisor before taking any further financial decision. Okay, first and foremost, we have been talking about the Bank Nifty hero or zero trades. Why did I coin a term called hero or zero trade, especially on an expiry day? Many people will be in trading in the options market, and if you would have seen it in the last 6 months to 1 year, many have been in making money, tons of money as an option buyer. Not only sellers, buyers as well make money. And what are the areas where are these guys are making money? How the these guys are able to make so much of money in an intraday trade and so on, and especially on an expiry day? You will get some of the answers today. And at the same time, for me, I consider open interest as my god. Okay, without open interest, nothing is going to be possible in terms of the options market. When I say open interest, you needed and if you would have attended my past session, I would have clearly explained it to you how you needed to look at the open interest from 4 different quadrants. First is the long buildup, second is the short buildup, third is the short covering, and then the fourth is the long unwinding. I'll just give a quick glimpse of how you needed to understand the long buildup, short buildup, and other things. What is a long buildup? Long buildup is nothing but when someone is buying particular strike and then the market moves along. When you're having the open interest going higher, along with the price going higher, it can be a call or it can be a put. When both the prices goes higher, it is called as a long buildup price and then the OI. In terms of the short buildup, what happens? Someone is taking a position, writing it, or someone is selling it. In that scenario, it can be a call or it can be a put. Someone sells it and then the price goes lower, but the open interest keeps going higher. Why it keeps going higher? Because someone is adding more positions in the system. Third quadrant, which is called as a short covering. What is a short covering? When someone has sold the product and he is trying to get or like buying the product back from the market. Imagine if I am a seller who has sold a product in the morning at 100 rupees. By end of the day, the product is trading at like 40 rupees. What I'm trying to do, I'm trying to buy it back because I know I'm going to be make a profit of 60 rupees. It's not necessarily like every time you will make a profit. Sometimes you would have sold it at 100 in the morning. By end of the day, due to like crazy moves as it happened today, the price would have gone to 100 to like 200 or 300. Still he has to cover the product because someone who has created the product is by the sellers. You all needed to understand the entire open interest is being created by the sellers. Okay, any position which you see it in the derivative markets is being created by the sellers, not by the buyers. So always when you're looking at the open interest, try to always look from a seller's perspective. If a seller is creating a position, how and what is the requirement for him to create a position, why he would have done that. If someone would know it, if I'm going to be giving it in a loss, do you think he is going to be selling the product? Absolutely not. So someone, if he is selling it, he knows he is going to be making money in a different way. So why this like when you know the sellers are the ones who are creating the position, why they needed to do it? This came into the picture purely because in the equity segment, imagine if I'm buying like 1,000 shares of Reliance today. Okay, I'm taking home like 1,000 shares tonight, and then tomorrow morning I'm getting a bad news. Okay, overnight you're getting a bad news that like and there is like some like a malfunction in a large refinery or something, and then the market like in Reliance is tanking 5 to 10% in the morning. And as an equity investor, what will happen to me? Because when it opens with 10% down, my like portfolio will have gone like 10% down. In that scenario, that's where like the exchanges came up with the idea called as the derivatives. In derivatives, whatever the position, in case if you're having like an in equity, you can go ahead and hedge your position in terms of taking a short positions or buying a put or whatever it is. So that's the way the derivatives market came into the picture. This is a quick glance. Okay, so short covering. What is a short covering? When someone has sold the product, when he's trying to buy it back, the product will be taken out of the system. In that scenario, the OI will go down, price will go significantly higher from the level at which it has been started to cover. Why? Because this guy is taking this like in price away from the system, right? So in a short covering scenario, price will go higher, OI will go down. And then the last one, long unwinding. What is a long unwinding? You will see both the price and then the OI going down. What is that significant? It is usually done in the far OTM strikes where you know at the end of the expiry, anything above the like an intrinsic value, it is going to be going into zero. So that's a reason you will see like a far OTM strikes, both the OI and the price will go down. In that scenario, people who would have been buying and like and thinking that, will I be getting a lottery today? Will I be getting like a 10 rupee option premium, like a strike goes to 100 or 150? If these guys see it by 310, 315 that it is not moving, then they have to be exiting with a loss or it might go and expire worthless. Okay, coming back to like an expiry day, like an strategy. Yes, many have been asking me, like, sir, is there a way where we will be able to identify towards the late part of the day on an expiry day whether some premiums can go from like an 20, 50 rupees to 100 rupees or 200 rupees or 300 rupees? Whether is it really doable? Yes, though it is not 100% accurate or 100% you will be able to say this is what is going to be happening, but to a certain extent you should be able to identify it. And what are the ways we will be able to identify it? That is something which we are going to be seeing it. What we are going to be seeing is we are going to be looking at the data of the last week expiry, that is the 18th Feb Bank Nifty expiry data. Okay, on that particular day, we had the Bank Nifty moving higher and lower. It opened like an higher, and then like an I'll just show you the chart of the last week so that you will know what exactly happened on the Bank Nifty. Bank Nifty at the opening candle. I'll just get you the exact chart itself. Okay, So if you look at this particular, like in the first opening candle, it opened at around like in 37,075, went to a high of like in 37,125, and went to a low of 36,700 and closed at that particular 3-minute candle at 36,946. So opening candle itself, you had like almost like a 500 point volatility. Okay, when I say 500 point, the reason is, don't look at the candle close here. In the opening second itself, it went to a low of almost 36,000, like in what to say 36,700 odd, which is very very rare phenomenon. I don't know, like in how many of you notice in recent past the Bank Nifty and Nifty is making this. This is purely because of some fat fingers, or someone is trying to punch in a large market order right at the beginning when he knows that this is what I'm planning to do with. I will definitely try to induce more and more like the money into the opening trade itself, and they wanted to take the market lower. So they have done that. In this scenario, the market is getting into a sell-off mode right at the morning itself. For the whole day, if you would have been observed on 18th, okay, we will just review the data on 18th, how it has been playing out, and what are the things which I want you to look at. Okay, I'll be using one of our like an inbuilt software called 𝐈𝐝𝐿, which we use it for analyzing the OI data, which is a real-time software. And we will be using it especially on expiry day to understand in detail how the option price is moving in every minute, and whether it is a long build-up or a short build-up or everything. So on this particular day, though it was like what to say, tricky day in the morning, I wouldn't say extremely tricky. It's a clear-cut move in terms of the market going lower. But the problem happened is, we didn't see significant OI buildup happening on the futures on that particular day. In the morning, okay, between 9:15 and 9:30, there was a huge short buildup happened at the futures. The price fell almost 100 rupees from previous day's close. There was like an 86,000 in terms of the short buildup happened right at the beginning, okay, between 9:15 and 9:30. I'm looking at an hourly time interval between 9:30 and 10:30. That is the time wherein some of the longs started to come in. Okay, if you would have seen it on that particular day, the market just tried to recover from the lows, but that was like only hardly for like in a minute, and then it just jumped 80 points, and the volume that was traded at around that particular time is 7,30,000. And followed by that, once the market was trying to scale up, it was like an inside candle which got formed, but there was like nothing major which happened, and the market was just like hovering around in that particular zone. If you think that, if you're looking at an hourly candle of that particular day, where is that? I will just show you that. This is the opening candle, and then you didn't see like a candle which is piercing through. It was like more of a dodging. Okay, when that kind of a market happens, and that too with a low volume of OI change, you cannot expect like a further move to happen unless and until someone is pushing it on the upside. That didn't happen. Between 10:30 and 11:30, you started to see another 7,000 and then 123 rupees gone. There is a small difference which you will be able to see using this data itself. When it was around 8,675 which was added, it is a combination of both long, short, everything happened during that period. But at the end of the like an 1 hour candle, you would have seen only like an 8,675 additional contracts got created, which had like and pushed the prices by 80. Whereas in the next 1 hour, with only 7,275 contracts, these guys were able to push the premium, like and push the price by 123. And the volume traded was also very less compared to the previous 1 hour. So 5,10,000. What gave me the further confirmation is the next 1 hour between the 11:30 to 12:30. Okay, 11:30 to 12:30 with 39,000, they were able to pull the prices by 272. And whenever you see these guys making a large move, okay, on the upside or on the downside with the volume, you will always see like a new low getting created the following hour, and that's what they did it. Okay, if you would have seen the low here from 36,830, it went to like and closed at like an 36,557, whereas the low was like an broken at like an 36,700. And in the next 1 hour,